Well, good morning, traders. Bitcoin is at 47,000. This is a new high yesterday and today that Bitcoin has reached in the first time in the last year and 9 months, around there. All right. And today I just want to keep you up to date on what the situation is, what the charts are looking like. I'm going to talk about 12 indicators that show us what Bitcoin is likely to do next. All right, guys, so here's my Bitcoin chart. I'm going to jump right in and get started because you guys are all familiar with what I have been purveying the last several posts and videos. Of course, we've talked much about this ascending red trend line, which started in October, the beginning of our bull run here for Bitcoin. And Bitcoin did take a dip below that red line, broke that trend line, came down to another trend line, which I have drawn here, the bottom of this megaphone pattern. By the way, I'm sorry for all the noise on this chart, guys. I did not clean it up before I started this video, and I realize it might be a little bit much for some of you. Just want a simplified explanation. My apologies. But I will explain what each of these indicators are and the significance of them, and hopefully that'll clear things up here rather than cause confusion. So we did hit the bottom of this megaphone pattern with a quick wick down, and then the bulls came right back in and bought this up. All right, they bought the dip, as you do. And so anyways, here we are today. We've broken back above this ascending red trend line. Now, what is going to happen today is anyone's guess, but we have not confirmed our candle until it closes above this red ascending trend line. And as you all know, I like to see actually 3 candles. The first candle will close above any or below any major support or resistance. And then I like to see another candle open and close above or below that support or resistance. In this case, it is resistance, was support, and is now still resistance until we close this candle and open another candle and close above. I like to see 2 open and closes above, and the one candle that broke through, I like to see it close above. All right, so 3 candles in total. And of course, you guys know my bet here. I think I entered this around 43,000, and I've been moving my stop limit up on this all-in trade for Bitcoin. Of course, I took 50% off yesterday. I don't know if my followers got the update on that. I've been only updating the one post that says Bitcoin update or whatever. I'll link to it in the description below. But I've only been updating that post because I don't want to spam you all with, a million notifications about what I'm doing on Bitcoin. You can also follow the trade tracker. I tend to update the stop limits on that from time to time, though it's not as it's not as up to date to the minute as maybe my update on my posts are. All right, so anyways, we took 50% off, or I took 50% off, and am moving my stops up somewhere around 4%, 3-4% below current price. So I'm still in this trade with 50%, and my target has always been 48,000. Though I do believe we could wick up to 50, 52,000 before we get some sort of a pullback here, a little bit of a sell the news. But again, not as bearish as those Uber bears are you're thinking. Some of them are calling for 15,000. Get out of town. That's not going to happen, in my opinion. I know it doesn't seem very humble at this point. Maybe not a very humble opinion, but I don't think we're going. We've set our lows, and I called those. That was the low many months ago, and I think that is the low. I don't think we're going back to revisit 15,000 unless, Biden administration starts this nuclear war that they've been having wet dreams about. But outside of that, I think we're good. All right, so anyways, I'm zooming out here because I want to show this big old cup that we have going on here. Why am I showing this? Because should we pull back, I want to show you something here, and I'm going to have to pause the video and unhide something. So that. Okay, so you'll see on this chart a little bit of a handle that I drew way ahead of time. We hadn't even formed this cup yet. In fact, we still haven't really technically formed this cup. This is just a proposed idea here. If we do get a sell back, my proposal is that we form somewhat of a little bit of a handle here, and then we have a massive cup and handle pattern. And I think I've alluded to this in past videos, but this would take us all the way to 80,000 sometime by the end of this year. All right, if this occurs in this fashion or this manner, which I think is likely. Now, the other thing I want to point out is this 48,000 resistance level that I have drawn here. Currently, my target, as you have seen and will continue to see, excuse me, that's my target there, somewhere between 47,000 and 48,000. Does that mean I don't think we're going higher? No, I think we are going to wick up possibly 50 to 52,000 before we get any sort of sellback, maybe as high as 55,000, 56,000. I don't know. This is kind of a mid-cycle, possibly we're going to have a little bit of a blow-off top here on the news before selling ensues. At least that's my anticipation. Maybe we don't get any selling. I'm anticipating that based upon the technical indicators that I'm going over in this video right now. So I'm going to show you this 48,000 was key resistance back here in March of 2022. Now we broke below that 47,000 before that in December of 2021. All right, and came back down, came back up and retested that as resistance. It definitely acted as solid resistance. And after that, everything was bearish. For the next year, we went all the way down to hit our $15,000 mark. Excuse me. And now we're coming back up into this resistance. This is major resistance, guys. So even with ETF approvals, I'm not quite sure that we'll break through that with confirmation. Remember that confirmation. I like to see a candle break through, another one open and close, and a third open and close above any particular level that is currently acting as resistance. So that is what I would want to see for confirmation that we are going to break that resistance, and that I will need to rethink my analysis. But sellers look to be, buyers, look to be drying up. Look at the volume here. It has been progressively lower and lower and lower as we go to this ETF announcement. Starting here, we were at pretty much the peak when we started in November 2022. All right, so then it's been steadily decreasing since that time. And if I zoom in here even further, since we began our bull run in October of this year, we had lots of buy volume here. These were the big players. This was smart money entering early, understanding, knowing, possibly having insider information that this ETF was going to be for sure approved. We'll find that out tomorrow. And then ever since then, it's been kind of retailers. Retailers are always late to the game, and the later to the game you are, the less your chance, of course. And that's why some people, and it's kind of derogatory, I don't know that I like this, refer to these retailers as dumb money. I think, that's a way you can phrase it. Just lack of experience, lack of knowledge, lack of understanding how big money players make this market move and make this market work for their advantage is what it is. And that's why we have these latecomers. But anyways, here we are at 48,000, and buy volume is drying up. It's progressively growing lower and lower, and I think we'll see that exacerbated upon confirmation of this announcement. All right, there's several other things I would like to show you. Give me a second to pause this video and arrange my chart here. All right, so what I've done is I've eliminated all of the other drawings and just have our megaphone pattern here. And I just want to talk about this a bit and why it's significant. Megaphone pattern, when it is ascending, is bearish. All right, it is definitely bearish, and we are in a megaphone pattern. All right, started back here. All these red circles denote times that we've touched the outer edge of this megaphone pattern. So as we built it up, touch the top, touch the bottom, touch the top again, bottom, bottom, top, bottom, bottom, top, bottom, and I think we will hit the top one more time. We may hit the top, I should say, one more time before we drop. Top and then drop, all right? But to do that, we have to break through this ever-present 48,000 resistance. That is significant. So I think if we do that, it's going to be a quick candle, a quick wick up, boom, and then selling ensues, and we continue our way down, break through this previous resistance again because we had not enough time to confirm it, and we break down and out of this megaphone pattern. That is just keep in mind, guys, yes, I'm leaning that way, but I'm not adamant that's going to happen. This is I'm just reiterating some of the things that I'm seeing on the chart, some of the things the chart are telling me is possible based upon analysis here. Okay, but I also want to talk about why the bears are wrong, that we're not going to go all the way back down to 20,000 or 15,000 or whatever they're saying we're going to go down to, all right? I want to spend a little bit time talking about why this probably is not going to be the case. In fact, most likely is not going to be the case unless, like I said, barring any nuclear war or another war. We've got Ukraine and Israel already. Election surprises, whatever. I don't know what's going to go on. Nobody does anymore. This reality is very distorted for humans of this earth. But anyways, here we are, and the reason, my synopsis for why we won't go lower than, I would say the lowest we could wick down to is 31,600. I've been talking about that for a long time, but that too is now unlikely at the moment. All right, that could happen and give us, a steeper cup or handle here, but I think it's unlikely for the fact that we have two very large support areas, and that is these red channels that you see here. Those come all the way from, okay, so this top one here was started in June. Oops, didn't mean to do that. Meant to grab my arrow. I got too much stuff on this chart. Anyways, this started way back here in June of 2022. And I've got two lines there because that both of those lines were acting as resistance. So now we got above them just recently with this bull run. And same thing with this steeper channel I've drawn here. I started this at our lows in January of 23. All right. So both of these were acting as serious resistance, and we broke both of those as resistance. And so now they can be big support, and I do expect us to come back and retest those. All right, typically you don't break through big areas of resistance without coming back to retest those levels as support. All right, so I would expect us to test at least one of those, and that is where I think we would end up if we do pull back here from this current bull run. Another thing I see here, and I want to just touch on this quickly, is this RSI. All right, so we have been descending. This is bearish divergence here on the RSI. We have been descending since, let me get the date here, October. All right, so when we began this bull run, essentially on the RSI, hidden bearish divergence can be seen on the daily. And so now we are coming up into resistance again here. We have just a little bit of room to run, and that's why I'm leaving room for move up to potentially 52,000, maybe 55,000. Quick wick up before selling ensues again, and this trend continues on the RSI. This bearish divergence is showing us that there is selling pressure coming. Excuse me, guys. All right, let me see what else here I want to talk about. All right, so I erased all my drawings again, went to the weekly chart. I just want to review this Fibonacci chart one more time. You can see here I've drawn Fibonacci. Let me put it in auto mode here so we get a better perspective. All right, so I've drawn the top of Fibonacci from our high in November of 2021 to our low, which took place in November of 2022. All right, and so these are retracement levels. Notice this is very significant here, guys. This 0.618. We often like to retrace to 0.618, and look at that price. $48,551 is the retracement level. We are almost there. And that lines right up with my resistance level, which I still have here, this horizontal line, approximately 48,000. All right. So that is why I think 48,000 is definitely going to act as resistance here for a little bit of time. All right. And that is important to review and pay attention to. Okay, the other thing I talked about in the last video on Bitcoin is the MVRV, market value, realized value, Z-score, zero score. And I talked about how CryptoCon, somebody I follow on Twitter, had used this to measure mid-cycle tops. Now, currently, he is suggesting that we are at a mid-cycle top. So down here on the bottom, you will see the MVRV indicator, and this is where he suggests we are. And you will notice something here. I've drawn this all out so you can see it clearly. Excuse me, guys. We had a cycle top back here in 2012. Is that right? I think I'm catching that date right. Anyways, that was our cycle top. And then we went back down. The green is indicating when smart money starts buying again. We come up to this line in the sand, hit our heads on that, and then it takes several months before we break out and go to a new cycle high, which was the case here in 2013. All right. And then after that cycle, went back into a bear market. Smart money, excuse me, guys, sorry about this. Buys down here. We hit our heads on this, that's the top again. That is called our mid-cycle. That is when a market value, realized value plateaus or cease from moving up. And they kind of, you can see they kind of intersect each other. And then we go down again and new cycle top. All right. And then bear market, come in, smart money buys. Same thing, all right, repeating itself. And this indicator has proven 100% accurate in the past. Now, I will say this about CryptoTop's analysis here. Notice one anomaly. Can you see the anomaly here? I believe realized value is indicated in orange down here, and market value is blue. In the past, and I just have been noticing this disparity more and more. Market value, realized value, not only hit their heads on the top here, but they were in sync with each other. In other words, they equaled each other. All right, so orange intersected blue. Market value intersected realized value. Market value intersected realized value. Market value intersected realized value. Each of those was a mid-top cycle. Well, here, CryptoCon is calling for a mid-top cycle, but we don't have realized value up here with market value just yet. And that is why I do think this cycle either may be different and maybe we don't get the pullback I'm talking about, or maybe a spike up to 55,000 will give us enough realized value to equate to the market value. And that is where those two lines intersect. I don't know, but calling a mid-cycle top here is probably just a little premature until we see this indicator equal what we have seen in the past. Till we see the same thing occur where market value intersects with realized value at every mid-cycle top. That has not occurred yet on this particular chart. Okay, just a few more things I want to talk about. This is the Bitcoin dominance chart, and you can see I had drawn out here several months ago this M pattern. This has played out, although I thought the target down might be a little bit lower than that. We did see a bounce right on some major support. Wasn't too surprising. I thought that might just form a bear flag. It did not. So alts had their cap, and then that's when Bitcoin began taking over in dominance again. Has gone all the way back up inside of this bearish triangle. We have not confirmed yet, though. I must say that. All right, this is only one daily candle. Again, this candle needs to close above. Two more candles need to open and close above this pink line for me to be convinced that this is still not a bearish pattern. In fact, if I jump over here and just let me start my Luxo algo, and we'll see what that says. All right, so Lug's algo is indicating that Bitcoin dominance is still bearish. That's interesting. So we have not, I think it needs to break above this previous high here for it to turn bullish, and that it has not done yet. Okay, so now on to our Bitcoin futures chart, and you can see that Bitcoin futures is still, oh, I hate this cold, is still indicating a bullish price action here. All right, so we do have a gap down here somewhere around 39,000. All right, that's this gap right here, and then below that major support at 36,000. So should we break this ascending trend line? Again, that lines up with what I saw on the daily, those supports there at around 36,000. Though, again, I'm not ruling out the question that we could come back down to 31,600. It would take a lot for us to get there. Again, major geopolitical event of some sort might take us there. Stock market crash, who knows? Anything can happen in this reality we exist in. All right, and the final indicator I want to point out, which might indicate selling pressure will come in, is this USDT dominance chart. This is US Tether, USD Tether, and USDC Circle looks the same. These are stable coins, and anytime we have this downward trajectory, that means people are taking off. They're using their stable coin to buy crypto. All right, and in this case, most of it happens to be going towards Bitcoin for obvious reasons. But now you can see down here on the RSI chart, the trend is moving up. There is hidden bullish divergence here. All right, that means that people are starting to take profits. All right, and it looks like the trend will continue. People will continue to take their crypto profits and put that into stable. Again, USDC looks the same way. This is indicating for us if money goes back into, if cash flow goes back into stable coins, they're taking it out of something, right? Currently, it happens to be altcoins for the most part. But will that translate over to Bitcoin? I think the possibility is real and does exist. All right, guys. So notice how I'm not being dogmatic about one way or another. There are a lot of YouTubers out there that are crying, hold or hodl because bull run is coming. Yeah, I believe that's true. There are a lot of bears out there saying sell the news because we're going down, when I believe that's true, though not as exaggerated as some of these bears are proclaiming, and not as bullish as other bulls are proclaiming. I think we're somewhere in the middle. That's the way the market works, right? It's a tug of war between bears and bulls. So at this point, I think they're both right. I think we may see a little bit of selling pressure post-seeding the ETF approval confirmation, if that even happens. I was being sarcastic at one point, saying that Gary Gensler is an upstanding citizen. There is no way that Gary Gensler and ETF insiders would front run this news. But that's not true, right? In fact, the likelihood of them doing so is probably greater than most of the market measures in. So we have to be careful here. There could be a little bit of a delay, a little bit of a hitch coming, and we may not actually see ETF approval tomorrow as everybody is banking right now. 94% of the market is banking on that. But nothing is certain until it's certain in this reality. Like I said, anything is possible, especially when it comes to money and shaking you upside down and leaving you holding the bag so that corporate greed can fill their own pockets. That's just the way these market movers work. And that's what I'm here trying to do, is I'm trying to help the little guy understand how the big players have absolutely zero compassion. They could care less about you. If they could, they would just do away with you so that they could make their own money. And unfortunately, that's what has pervaded throughout all of economics and has seeped, unfortunately, into American politics. They just do not care 1 ounce about you at all. Zero. If you understand that, you will be a better trader, guys. You will learn how to defend and take care of yourself financially and economically, and then that will spill over into everyday life. And then you will learn that the things they tell you to do that may they claim are healthy, that will save the world, that will benefit humanity. You should do these things for compassion of others. You will learn that all of that is a lie. And if you can do that, you will better be able to take care of yourself, your own health, and your own prosperity. That's the goal and aim of this channel. So hopefully some of these things you can take and support your own trading strategy with these different indicators that I've shown you. And my goal and my hope is that it will benefit you. All right, until the next video, peace, y'all.